Hey everyone, welcome to another video by Stocktrades. My name is Matt and today we are going to take a look at the Canadian Dividend All-Stars, Aristocrats, which are expected to raise dividends this coming month. April was a slow month. There weren't too many All-Stars scheduled or did raise dividends, but this month we are going to see dividend growth ramp up and we're going to let you know which companies to be on watch for right after this. Before we jump into the All-Stars, for those of you who are new to the channel, just wanted to give you a brief rundown of what an All-Star or Aristocrat is. These are companies that have raised dividends for at least 5 consecutive years. Now there is a slight difference between All-Stars and Aristocrats. I do prefer the All-Star list. It is a little bit more restricted than the Aristocrat list. The main difference between the two, if you will, is that Aristocrats can keep their dividends steady for 2 consecutive years before being dropped off the list. Whereas All-Stars, it's one and done. So I prefer the All-Star list. I think it's much more comprehensive and the stricter requirements does, in my opinion, lead to a more reliable list. So with that in mind, let's take a look at the companies that are expected to raise dividends this coming month. And we're going to start by those that are expected to raise dividends this week. First up on our list is Loblaws. So will they or won't they? This is going to be a question we're going to be asking ourselves quite often over the next couple of months. Why? Because at this time last year, there was a lot of companies that either kept their dividend steady or cut the dividend in light of the pandemic. Several of these companies ended up raising the dividend after the fact, so they have broken from their normal raise pattern. Loblaw is one of them. They raised a dividend this past fall, but historically, they have always raised along with first quarter results. So what does this mean? It means that if Loblaw is going to return to its normal historical pattern, a raise will come this week. Historically, Loblaws has raised dividends by the mid-single digits, and we don't expect anything different this time around. I'd say in the range of 5 to 10% is likely what investors are going to expect, should Loblaw return to its historical pattern. Not a guarantee, it might not, and it might save the next raise for the next fall. We'll find out soon enough. Next up on our list, we're going to be looking at Franco-Nevada. Franco-Nevada is one of the most reliable mining dividend growth stocks on the TSX index. In fact, it has the longest streak in the industry, in the entire sector, if you will. It was one of the few companies that raised dividends in the middle of the pandemic, and it owns the longest dividend growth streak among all TSX listed mining companies. So like clockwork, Franco-Nevada typically announces its annual dividend raise along with first quarter results. Franco-Nevada is dual listed and pays out its dividend in US dollars. Since 2015, the company's annual dividend raise has been exactly a penny per share. Not surprisingly, this has led to a declining growth rate. Last year's 4% raise was the lowest on record during its current streak. It's also important to note that while Franco-Nevada is a leading gold streaming company, it also has energy assets that negatively impacted results last year. So given the strong price of gold and oil's rebound from pandemic lows, now might be the perfect opportunity to break that declining streak. I say might, but in reality, the company has already telegraphed that it's expected to raise dividends a few weeks ago. It did so at the company's investor day. The company expects to raise dividends by 15% to US 30 cents per share. If you read the fine print, you'll see that the dividend is expected to be formally declared in May. So, bottom line, it's the easiest prediction I've ever made. It's not an official dividend raise until they formally declare it, which is going to happen this coming week. Next up on our list is Algonquin Power, and this is also one of the most reliable dividend growth stocks on the TSX. It has a 10-year dividend growth streak and, much like Franco-Nevada, was one of the few companies to raise dividends during the pandemic last year. Also of note, Algonquin is dual listed and pays out the dividend in US dollars. What I appreciate about a company like Algonquin is that it has a clear and publicly stated dividend policy. The company has a targeted payout ratio between 80 to 90% of adjusted earnings. And according to its investor day in December, this should support another 10% dividend increase in 2021. Which is in line with the company's historical average. So, what can investors expect out of Algonquin? Well, they've already let you know, 10% dividend growth in 2021. The last company on our list that is expected to raise dividends this coming week is Hydro One. Hydro One is a leading utility company and is one of the newest All-Stars. Since listing on the TSX back in 2016, Hydro One has showed a commitment to growing the dividend, and it has a 5-year dividend growth streak. This announcement always comes along with first quarter results. So how much can investors expect? Last year's 5% raise was right in line with each of the previous 4 raises, and as such, there's no reason to expect anything different. It also happens to be in line with the company's 5% compound annual growth rate in projected earnings and cash flow growth through 2024. So, in my opinion, mid to single digit dividend growth is all but a guarantee here. There are also a couple of other companies that are expected to raise dividends later in May, and we start by taking a look at Finning International. Before we jump into Finning, please let us know in the comments below, are there any of these 4 stocks that you own that you're looking forward to the most? Personally, I own Algonquin Power. In my opinion, it's all but a guarantee that they're going to raise. And I've been looking pretty hard at Franco-Nevada. Haven't taken the plunge there yet, but given how much the company has pulled back, it is one that I'm taking a hard look at. So let us know, which one of these do you own? And let us know the 2 that we're going to talk about coming up if you own any of these as well. So let's now talk about Finning International, which many may not know owns the 15th longest dividend growth streak in the country at 19 years. Finning is going to be looking to expand its dividend growth streak to 20 years as it reports first quarter results later this month. Despite owning one of the longest streaks, however, the timing of Finning's announcements has fluctuated wildly. There is no pattern. And since the company kept the dividend steady last year, it has been 8 consecutive quarters since the company last announced a raise. So that came with Q1 results in May of 2019. So as a result, Finning is now on the clock. It has until end of year to announce a raise before it loses its all-star status. That being said, given the strong results posted by its peers, I fully expect the company to come through for investors. Once they do, don't expect much. Finning has historically raised in the low single digits, and the last time it raised dividends, so in May of 2019, it did so by 2.5%. So don't expect much, low single digits, but in my opinion, Finning will come through. I have no doubt that they're going to extend their streak to 20 years. It's just a matter of when. Another company that is in a similar position is Onex. Onex is a capital management company and it has approximately $44 billion of assets under management. Prior to the pandemic, it had consistently raised the dividends along with first quarter results. However, the dividend was kept steady for the balance of 2020. Much like Finning, it has now been 8 consecutive quarters since Onex last raised a dividend. The company's last raise was around 14%, and historically, it has averaged growth in the low to mid-teens. So now that the company is opening up, will it return to its historical averages? While it performed quite well in 2020, this is still a company that bought WestJet just before the pandemic. And as one of Canada's leading airlines, we know just how badly that industry has been hit. That being said, Onex is very diversified, and I do expect the company to come through for investors. And unlike Finning, which has a spotty dividend growth pattern, Onex has consistently raised along with first quarter results. So if they're going to raise, I fully expect that to come later this month. I don't expect something in the mid-teens, but perhaps something in the 10% range is doable for a company like Onex. And that pretty much does it for the companies that are expected to raise dividends this coming month. There are 6 companies, 4 of which are scheduled to announce a dividend raise next week. Those would be Loblaw, Franco-Nevada, Algonquin Power, and Hydro One. As mentioned, I owned Algonquin Power, and I'm looking hard at Franco-Nevada. The other 2 are Finning International and Onex, both of which are expected to raise in the later part of the month. Of all those 6, I would say Algonquin Power, Franco-Nevada, and Hydro One are all but guarantees to raise the dividend. I'm a little more uncertain about Loblaw because of that disconnect between its historical pattern and what happened last year. And Finning and Onex are both on the clock in terms of their dividend growth streaks. They have each kept the dividend steady for 8 consecutive quarters, and they have until end of year to keep their dividend growth streaks alive. So please, let us know in the comments below, which of these stocks do you own? Are there any that you think will not raise dividends? I think there's a strong possibility that a company like Finning might not this quarter, but overall I'm fairly confident that most of these will. The biggest question mark for me is Loblaw. So let us know in the comments what you think, and as always, please like your video and subscribe to the channel for more great Canadian content. Until next time.